these stocks within the broader basket have corrected around 30 to 40%. Anything that is standing out for you at this point in time, which can actually participate from the forefront in this sort of a recovery?
Good afternoon, Shrishti. No, the own sense is that it's going to be very, very selective as far as the broader markets are concerned. And you're absolutely right. I think if you probably track the NSE 500 companies, after 2015, the COVID crash and 2022's crash as well, only 10% of the stocks are trading above the 200-day simple moving average. And therefore, I think if you're probably looking at a large part of the broader markets being butchered, I think that's the right way to probably put it. How will earnings play out? Going to be extremely interesting for the broader markets, but specific pockets like agrochemical rural themes is something that are throwing up in our sector rotation software pan rail. We've also probably got hospital stocks which are coming up where the earnings have been pretty reasonable so far, and therefore I think expectations in terms of earnings will bring up. For a large part of this pool, whether it's agrochemical companies, some select fertilizer companies, you've seen tractor makers post decent numbers as far as the February or the January sales are concerned as well. And therefore, rural themes should come back. Hospitals as a space should continue doing well. And among the mega themes, my own sense is that banks selectively should continue doing well. Again, historically, what we've probably seen that after such a huge lull and a correction and a downfall in the markets that we probably got, the next rally that comes through and the sector that leads the rally, it might be a totally different stock leading the rally as far as banks are concerned. And therefore, I think we've got our eyes focused on Kotak Bank, particularly with the large cap names, where our belief is the numbers in Q3 have been reasonably better. The expectation in terms of slippages might continue in Q4, specifically on the microfinance book, which is almost 8,000 odd crores of the total book of Kotak Bank. But that should largely get compensated in terms of asset quality pressures coming off in the retail book, cost to income ratios remaining stable. NIMs have remained extremely stable at 4.93%. And therefore, with the addition of the Standard Chartered book as well, the expectations in terms of some element of clawing back of CASA, along with improvement in NIMs as well, along with moderation in overall slippages and cost to income ratios, should augur well for return ratios. So I think banks selectively might do well. We are keeping our eyes closely on Kotak Bank within the larger names.
Talk to us about the business prospects for IRCTC, because the whole travel and tourism theme is buzzing off late. And IRCTC, well, of course, we all know about the moats lying there. But how do you see the growth of IRCTC in terms of the financials? And do you believe that there's an opportunity for an investor to go ahead and chip in some money here after the recent correction?
You're absolutely right, Shrishti. I think the big picture argument always has been in favor of IRCTC. I think it is one of the biggest ticketing players in the country. More Vande Bharat trains have been introduced, a lot more expected in the pipeline as well. Railway stations have got renovated. You're probably looking at railway lines, which are probably getting refurbished as we speak. Safety mechanism being put in place. Therefore, a lot of tailwinds happening for the entire sector as well, and a decent allocation that has happened through the budget as well. Being one of the leaders as far as the ticketing platform is concerned, what they've also forayed into in terms of rail need, as an example, there again, I think the margins have been pretty decent as well. But they've been lagging in numbers very, very earnestly, and therefore, I think the kind of performance it has been an indicator in terms of how their financial performance has been, which probably has been on the downside. Now, again, I think the next few quarters, there is some element of hope that numbers should start improving. You've probably seen this quarter where the boom has happened. I think a large element of train travel has probably happened across the length and breadth of the country. As we head into Q4 and Q1, and as summer vacations will be around the corner, you will probably also assume and expect a large part of the ticket booking, which is the heavy lifting that IRCTC does in Q1 and Q3, when the holidays normally coincide, to probably be the best quarters in terms of the reporting numbers. But a large part of their business elements, the hope now is that a large part of their earnings underperformance is largely behind us. As we are seeing a large part of rural recovery take place, there is expectation and hope that earnings might have bottomed out for IRCTC. And the best quarter, which is to come in this quarter and the next quarter, I think the numbers will be relatively better enough to probably re-warrant or warrant back some element of an earnings revision or relating for the stock. So yeah, I think hoping that, and the hope is that the numbers will come through, hoping numbers will come through positively, reflecting positively in terms of the funds.
But Mayuresh, do you not believe that to cash in on this entire travel and tourism industry, the best way is still hotels or maybe aviation?
So Aisha, again, both. Largely, I think aviation will continue doing well. Again, I think the same logic probably applies to a large part of the travelers for home, and the same logic for IRCTC. I think the best quarter will come in the coming quarter when the summer vacations coincide. Again, I think what you're probably looking for aviation stocks, crude has probably remained far more stable, and therefore 45% of the input cost is the aviation turbine fuel, which remains constant. Obviously, the currency is depreciation, so a large part of the benefits that come through with stable crude probably get offset with a depreciating rupee. But to a large extent, I think the new fleet additions that are going to happen for Air India, for Vistara, or for the other players as well, is still going to take time. And therefore, I think Indigo might continue its share in terms of both the leadership position that it has in the skies, as well as the load factors, and therefore the margin performance as well. But hotels as a space, in my opinion, Aisha, should continue doing well. Obviously, I think with this entire team coming back in focus, hotels and hospitality should continue largely doing well on the premise of average room rates being relatively higher, expectations of ARRs being maintained or going even higher in the next couple of quarters probably is a given at this point of time. A large part of the hotel universe is adopting an asset-light model. If you see Lemon Tree, Chalet, if you're seeing Indian hotels to a large extent as well, or even the smaller players, I think there is sufficient amount of growth that will come through with not much of leverage adding onto the balance sheet, and asset-light model ensures that the dynamics in terms of top-line growth, margin performance continues as far as balance sheet is concerned. And then for hotels as a space to continue with this team, selectively looks good as well. So Indian hotels, as an example, might continue doing well, even if valuations are a little bit.
All right, Mayuresh, with this, we'll let you go on that. Really appreciate you taking the time out and speaking with us.